Hi, and welcome to my new channel Battebrau.
It's a regional dialect.
I created this channel because I wanted to take a look at some of the strategies that the trading community of YouTube has created, and to see if they really has any value at all, or if they are just clickbaits. I will do a little bit longer introduction than I plan to do in the future, so have a seat for a minute. I'm just gonna start the backtest, and there we go. On YouTube, scammers don't really need to steal your money to earn money for themselves. They can just sell the viewers an image of being a successful trader, or as in our case, they sell a non-functional trading strategy for clicks and views. And in some cases, real money. It doesn't matter if the strategy works, and they have absolutely no incentive to do any deep testing by themselves, because that would almost certainly prove that the strategy doesn't work. It is much better to just show the viewers some trades where the strategy appears to work and just take the ad revenue and sponsorship. Most of these creators would never use any of their own strategies, because that would ruin them. It is much safer to convince others to try them. And there usually only is one winner in this trading strategy building genre, and that is the person who tosses together a strategy, tests it way too few times and under a very narrow time frame in a specific stock, and uploads it to YouTube promising life-changing results. And maybe it really did good in this specifically chosen bubble, but the strategy needs to have a plan for all weathers. It needs to be stable and noble, like this dog I found. I will do some tests in PineScript, and in the best case scenario we actually find a working, well-tested method to trade. And in the worst case scenario we can save some people a lot of time. So let's start. I have picked a strategy named MACD OverBought OverSold trading strategy, high win rate forex and stock trading. For simplicity I will call it the MACD cross strategy from now on. And the reason I picked this one is because right now the video is just 1 month old, and because the strategy is named out of simple and known indicators. So if you want to try them out, you don't have to buy them or need to find them in any specific trading platform. According to the YouTuber, this is the ultimate MACD strategy, and it has remained a hidden gem until now. And it will work in any financial markets, which is very impressive if it's true. It is almost certainly false, but who am I to judge? It says 99% on the box. It could be win rate, account growth, or deception. Calling a MACD cross strategy a secret is definitely a red flag. The strategy consists of 2 EMAs, one with length 12 and one with the length 200. And below is the standard setting MACD, and below that is the stochastics with the 12, 6 and 3 settings. So remember to change that. And this is how it looks when all things are said and done, and it's beautiful. So let's start with the stochastics, because it is a somewhat fussy part of this strategy. The stochastics gives a buy signal when it leaves the oversold area of 25. But the creator doesn't specify how far from the oversold area that is still considered a valid buy signal, or how long since a crossover it's still considered okay to take a trade. Is it here, here or here? Just that the crossover at the extremes needs to happen, and that it hasn't crossed into the overbought region of 75. And here is the sell, and it's just the opposite. A crossover from the overbought is needed, and for the line to not yet has crossed into the 25 region. It is a vague rule, but I don't think it does that much good for the overall profits anyway. Like in this video, we can see that the stochastics is almost overbought, and at that point, why even look at it? Therefore, after we check the original strategy, I will delete this rule to see if the strategy performs better or worse without it. And regarding the question of how long time since the crossover that is still considered as a valid signal, this example shows that it's still okay to take a trade after 5 bars time, so I will use that information in the code. And that was it for the stochastic rules. The explanation for the MACD rules will go much faster. It is really simple. For buy order, we need a crossover of the MACD line and the signal line, which need to happen below the MACD 0 line. If you want, you can hide the histogram, we won't use it. And for the sell signal, we need a cross under of the lines above the MACD 0 line. Last, we have the EMAs, and the only thing to remember here is that the price needs to close above these moving averages for a buy order and below for a sell order. It doesn't need to cross over the EMAs just to be above or below, it's just a trend filter. There are two very important components left, and those are the exit rules, the take profit and the stop loss levels. A win rate means nothing unless these two components are somewhat decently specified. For stop loss, this strategy uses pivot points, which are these pointless tops and bottoms. And that is a very common and natural way to place a stop loss. Many people use it. Sometimes fractals are used instead, which in philosophy are separated from pivot points, but in the real world they are pretty much identical. More often simple support and resistance zones are used, which are just zones of price discovery and supply and demand. Zones that very much includes pivot points. It makes sense that the latest level that the market deems cheap or expensive still will be considered cheap or expensive shortly after. The downside to this is that every trader uses the same level as a stop loss, which means that there will be stop loss hunters trying to trigger this level to move the price. An obvious stop loss is an obvious target. On the other side of the stop loss is a take profit, and here I ran into a problem. I can't find any. Where is the take profit? And I realized that there is no take profit in the tutorial video. It's imaginary. He just paints an area up to the top of the curve and says, sell here. Here. No, not down there, up here, on the top. Which is, of course, impossible to know beforehand. In reality, a fast take profit will get you out of the trade early, somewhere around here, with the risk of missing out if the price decides to continue in your direction after a short reversal when you are standing on the sideway. And a slow take profit will rob you from some of your profits when the price do change direction. But you will survive shorter reversals and catch the larger trends. In this picture, the take profit does both. Using this example, in reality the stop loss will probably have triggered either here, which is about 25% of the previous profits, or way down here on the other side of the top, possibly at the EMA 200 line. So, what should I do? Should I either have to invent the best take profit indicator of all time, or should I use one of the indicators that's already presented in the strategy? The EMA 12 is too fast and would probably stop each trade too soon. The EMA 200 is obviously not what was imagined in the examples. The MACD is also fast but better matches the strategy, so the MACD cross it is. To make sure that the losing trades are only closed by the pivot line, I would add the rule in my code that the MACD take profit only can close the positions in profit. Great, all rules are followed. In the video explanation, 3 currency pairs are tested. Strangely enough, all of these have the USD as a quote currency, which may narrow the variations in the test. The time frame is 1 day, but I will also test the currencies on the 1 hour time frame. I will use 2% of my total equity per trade, and this is important, no commissions. You will need to subtract the cost of commissions yourself due to variations. Just remember that you need to both open a position and close a position, which will cost you twice. The number of trades will be presented in the results. So let's get coding. Okay, this is how the script ended up. And as you can see, it works as intended with the MACD crossover take profit, and here is a failed trade with the pivot stop loss. Maestro, drum roll please. Yeah, it isn't good. I will mostly evaluate these through the profit factor measurement, which is what we get back from every dollar we used. By using this strategy, we lost over 20% of the money we used. And remember that we did not include commissions. Even a small commission will have a large impact of our result. Regarding the high win rate promised in the original video's title, it is worse than tossing a coin. And just give me a second. Yeah, 1972. We have been trading for over 50 years. An investment in the common larger indexes would have made you rich by now. Let's throw this away, and one more thing. The GDP USD was double the price of today, which means that we bested the buy and hold strategy. Onwards to the 1 hour chart, and it's almost as bad. The profit factor is 1, which I think is worse than the previous chart because it's just boring. We have been at a loss just as a long time as we have been in profit. And this time we were just lucky to end up on the positive side of the equity curve. So it's also completely useless. Let's move on. The Euro-USD 1-day timeframe doesn't look that bad. It has traded 122 times, which is much for this strategy in this timeframe. It has been holding a steady profit since it started trading with an almost spot-on 50% win rate. But if we look at the curve, we can see that equity is currently below the peak of the 37th trade, which was closed almost 35 years ago. We are searching for incrementally small but steady growth, so this goes in the trash. The 1 hour timeframe also has a 50% win rate, so at least it's not worse than the pure chance in this case, but it's not really useful. Next up is a New Zealand dollar USD 1-day test, and not much to say here either. Just one win followed by one loss in all eternity. The New Zealand dollar US dollar 1 hour chart is the only chart that actually has an upgoing trend. Sure, it has stood still for about 30 trades, so it probably says more about this specific currency pair's behavior than it says about the strategy. What we see here is probably a decent amount of curve fitting by pure chance. I want to see if this strategy is needlessly complicated, so I deleted the stochastics, which should leave me with a strategy that can trade more freely. So, how did it go? Benchmark time. The GDP USD went from this to this, which is a huge improvement in every possible metric. The Euro USD went from this to this, which is also an improvement in every possible metric. The New Zealand dollar USD went from this to this, which is also an improvement in every possible metric except for the win rate, which was only 1% better before, but our profits was doubled. By deleting components of what is presented as the ultimate trading secret, we can improve the strategy, which is pretty funny. And it is a good example how you can ruin a good base for a strategy by just adding more stuff without the purpose. One of the reasons the MACD cross strategy lost to the benchmark strategy is that the original strategy did not trade enough. And the difference is that in the MACD cross strategy, all the indicators and rules stopped it from trading without elevating the win rate in any meaningful way. Like in this example, let's say that we want to catch the uptrend and the downtrend. The time it took for the market to finish this price movement was almost 2 years. The MACD cross strategy starts here, but that wouldn't be a legal trade due to the EMA, and since we now are in an uptrend, the MACD will not come down below the zero line to let us in. The next MACD cross happened here 9 months later, when 75% of the trend has been completed. And for the bear trend, you won't be let in until the trend is over, just like me, rocking my fidget spinners at the gym. I think this image of the 1 hour time frame Amazon chart is very telling of this strategy. It trades with about 50% win rate for a couple of years until it catches a larger trend, which hopefully moves you into the green, if the MACD lets you in at all. And that's it. Thank you for listening. And if you have a specific strategy that I should take a look at, name it in the comments. Bye.